learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming into July 30th, 2020, and the stock market is going to be important tomorrow. I don't think I've ever used that title, but tomorrow is going to be very important because we are getting the big kahuna of earnings, the FANGs, Facebook, Apple, Amazon, and Google. We already saw Netflix, but depending on what happens tomorrow with what we saw today with Jerome Powell, it will give us an idea of what could really move the markets here. So I'm going to show you guys a lot of stuff here. We're going to go over the S&P 500. We're going to go over the Dow Jones. I'm going to show you some of what I'm looking at and how this could lag or lead and why it's going to be important tomorrow. But then I'm also going to show you guys some of the trading strategy and plays that we made and some of the plays I'm looking at, but mainly the strategy towards reacting. We had a nice like 400% play today. It was because of earnings. We're seeing the market get surprised. So I want you guys to be able to see this, but it is very, very exciting. Today was exciting. We're going to have another exciting day tomorrow, so I hope you're ready. But I got all of that stuff for you, so let us not delay. You know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first thing in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You could post the plays, see the plays, watch the watch list come to life. And there may not be any sports, but we got Nigel Chadberry in a real-life 1v1 Josh Answers versus Jerome Powell. It's like AI and Jordan. It's like Tom Brady and Tom Gibson. It goes crazy. So I hope you're ready. I hope we see you there. I hope you guys had fun today, too. It was really, really exciting. A lot of cool info. But the most important thing you need to do, post your watch list below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info, Chad. We need your help. Post the plays. And catch us on Twitch. It's in the description. Yeah, Trading Fraternity. Yeah. But right off the bat, one thing I will show you is with the SPY, Apple, and Amazon. I mean, right off the bat with earnings, it is going to be important. I think I'm going to play it. So after what we saw today with some of these surprises, I have two strategies I'm going to go after. But this is what we're looking for is it going to lag or lead? So all of these big companies report, and usually, if you guys remember, there was this report here with Amazon. So if you guys remember, we played it at one point and there was this like divergence and it caught up. Usually you could kind of see that with NASDAQ. Right now, the only divergence is between the SPY and pretty much TLT bonds. Pretty much with the market this high, TLT should be down here. It shouldn't look like this. So there's a divergence between the 10-year, but really this earnings season, although these earnings could be important, and this is why tomorrow will be important because everything is paired up. So if something is bad from any one of these companies, they can lead the market down or kind of change this whole divergence scenario when now everything is kind of paired up. So this is the main thing I'm looking for because if there was a divergence, I'd say we could see a drop. But again, a lot of expectations have changed this quarter. You see how Wall Street's reacting. You've seen some of the past earnings. Right now, the overall consensus is that nothing really should happen tomorrow. However, I think I'm going to go after some puts on some of these companies just in case because if anybody fails tomorrow, they will lead the way down. Otherwise, now, this is pretty much the main point with what we saw in Powell and then coming into the keys. I had to make it a little bigger, but after tomorrow, we're going to know at least a little bit more information or we'll get surprised by one of these companies. But the main thing we got out of Powell today, what I was talking about with TLT, everything going on, we know what to watch for now. It's either going to be Congress or inflation. And now that's why tomorrow is going to be so important as well, because if none of Apple, Amazon, Google, any of those move the market or there's a real big move and they just kind of move within expectations, then end of the month in the next few days, or the last trading day is Friday of the month. So by Monday, we will be in August, but that is when some of this employment benefit stuff ends. So now if you guys have been following along, they ended a few days ago the moratorium on evictions, but now a lot of the unemployment benefits aren't there and they haven't agreed on it. They have talked about a temporary bill and that could do it, but this is what we were talking about today. We went over the whole thing. We kind of have a better idea on how to play Powell and everything else now, but if Congress isn't willing to support and get money out there, that is what is going to lead a downturn here to the market. So that will be the confirming move. Pretty much, if you don't see Apple, Amazon, or Google drop the market, but then by the end of this week, regardless of even if the companies go up, then you find out that we haven't got that Congress bill, it could start to get a little bit volatile coming into August. Or the next point, based on what we got from Powell, it's going to have to do with inflation or even some of the jobs numbers. When if any future data comes out and it starts to look like it goes against pretty much what Powell said, and that things are the data looks like it's getting worse. You heard what Powell said about it. That means that, well, things will get bad. Again, watch the recap today on Powell. I'll probably make a weekend video. We need to talk more on Powell and what he did today, but I know it's going to come up here in a few days, but it's still all developing considering with what we need to see tomorrow. We need to watch the earnings report. So it was kind of hawkish even at one point today too. Powell even, and I think this part was kind of missed because I was looking at it. You saw the dollar move and you saw the S&P move because he made comments. He was pretty hawkish to a degree. He was kind of borderline. He said some positive things, said he'd support the market, but he did say things were slowing. We did point it out on stream. One of the biggest changes was that he said that the Fed put in the statement that the economy depends significantly on the course of the virus, and that's not what they said earlier. So that tells you something. So again, if that data gets bad and it shows more struggle with employment and getting that money out there, inflation, volatility, again, I encourage you to watch the recap today. I gave a pretty good analysis of it. But those are the things to watch for, and that is pretty much going to take some time to develop here, and then the earnings tomorrow will give us an idea. So watch out for all that. The other main point, finally, to wrap it up, is that the market has been wrong a few times already. So what that same thing I showed you at the beginning of the week with how market expectations have changed, we saw that hit now. I didn't get to play it, but Qualcomm did it. I'm going to show you with it, but we've already been proven a few times, not as many times as we've seen in other earnings, but the market has been wrong. So the opportunity's there. Tomorrow's going to be a big one. That's why I want to look out for it. Again, that being said, I want to not be timid and take advantage of what we see, but control the budget because there is opportunity, but it is also few and far between. So there is that. I cannot wait to show you some of the plays and strategies that we're going to go over and even what I just talked about. So I hope you're ready. That is pretty much it, but let us get into the plays. Right off the bat, I have a few things to go over. One, Fang puts, this time I'm actually going to take them tomorrow. I need to see the prices. My idea, the sweet spot, Amazon, I don't want to spend more than like $200, but they're going to be far out the money, or more time. I don't want to spend more than $500 if it has time, but I want to keep it small. The other plays, Amazon, Apple, Facebook, you could get cheap. Google's a little bit expensive too, so we'll go over those, but the key concept that you guys have to see is what we've been talking about with market expectations and cheap contracts. So the example here is Qualcomm. Oh my gosh. Bro, this is crazy. See, they did it. So even though this is a weekly, and granted, you will see these are contracts with not as much time. So even if you go to the next week, they're a little bit more expensive. You would have hit it on the weekly, not on the next week's. But the overall concept is what we've been talking about is a lot of these companies, the last few days, they've dropped expectations. Now, the next week doesn't really highlight that on Qualcomm, but I guess they all kind of look the same. The last 3 days, it kind of held a range because earnings, but for the most part, you could see how the expectations change, and it has decayed a lot because of time. So you can still kind of see with the longer-term contracts, but this is what I'm going to be looking for. So I already have a bunch of Amazon puts, and we're down a lot on those. Remember, we got crushed on them. So those are August and July's. If I could get more time, it'd probably be better. But like I said, if you want to spend less than a couple $100, you're going to be pretty far at the money. It's like a 100% drop. But granted, Amazon has moved up a lot, but the idea is to get cheap puts. Now, you see all these. If you're going to be playing them, these are very illiquid. Even if you hit some of these, you won't really make money. So that's the idea, is depending on tomorrow, I want to see what I could do, or the best alternative would be getting a debit spread. So the key with Amazon, I know you guys are going to ask this. You could do this for any of the earnings plays, so I hope you're paying attention now, is how to price them. We've gone over this a lot. Stock's at 3,047. If you want to know what the market is expecting for earnings with options, you take the at-the-money options and add them together, because what people are charging for options lets you know the break even. So if they're charging a certain price, that means they expect it to go somewhere. Otherwise, they would charge more or less. So in this case, these contracts are $2 in the money. So subtract $2 from the ask, but assume you bought it on the ask, that would be $81. And now take this put. This put's about what? Another $2 in the money. Do the same thing here. That's like $99. So $99 plus 81. I'm not going to lie, I had to pull out a calculator. That's $180, but that's the expected move now. So stock's at $3,047. $180 is a little bit more than 5%. So Amazon is pricing in a 5% move. Now, you just heard me and saw me do that. Let me give you another trick. If you have Thinkorswim, you could get this information very, very easily. Come to the trade screen, enter in the ticker. Here is amazing. And then what do you see here? You'll see two things. MMM, this is the market maker. I don't know what the other one's for, but this is the expected move. It says plus or minus $150. We just said 180. That makes a little sense. This is a little lower. This is the expected move. Now come to the option chain. You'll notice here, plus or minus again, 176. Factoring in the volatility, what the market is pricing in, it's 176, so 20 bucks higher than the expected. You see, I did the quick math in my head. I fell in there around 80 bucks. Boom, you now have 3 different pricing expectations. God bless you. So that's what I'm going to be looking for all day tomorrow. I just showed you this. Maybe you could help me out on stream. So this is going to be the idea, and then finding contracts that will be cheaper. I'm not going to get too jumpy, but I don't want to be too timid. Let's see what it provides. But granted, what I already showed you, there's no real divergences. So unless there's big news, I think Congress could move the market, but there's no real divergences. The market isn't really expecting a big move. We've only seen 2 real surprising breakouts so far this earnings season. So keep that in mind. I'm just kind of seeing it, but better to be late than wrong. So I still might not do them, but I'm interested. I just don't want to be too timid. I'm letting you know now. So there is that. And now the next play, this has to do with the play that we made today, and it's going to be a continuation. But Qualcomm, I already showed you guys, this is one I'm going to be looking at tomorrow morning to be playing, but we made a move today on AMD. So watch Qualcomm tomorrow, but take a look at our AMD play today. This is the continuation earnings, and now you've seen me do this before, and you've also seen me get smacked on it. So I only did 60 or 50 bucks for a reason. I hope you know I put a bid in higher. I got filled less. It was a weekly. Very, very risky. It's a weekly. That's why I move like this. It's following earnings. This is a continuation play. But if I was wrong, I got a good price for a reason, and we made 400% in 5 minutes. You could literally see it here. But if I was wrong, I would have lost a lot. So that's why I play these small. I literally put $50 in. I got 10 of these contracts. We got the 86 contracts at 5 cents. 5 minutes later, they went up to 20 cents. I sold out 4. I got 80 bucks back. Made 50% profit on my initial investment, and then I have 6 contracts for free till the end of the week if AMD does go crazy. So these are 86 contracts. That's $10 more out of the money. That's a whole nother earnings move. It's most likely not going to hit. That's why they were cheap, but in the morning they went up. But what's the idea with this strategy is that in the morning off of earnings, what's going to happen is some of these companies will report. In this case, it's going to be Qualcomm tomorrow, and some of the option chains aren't going to appreciate. Right in the morning, this option fell down to 5 cents at close. In the morning, it traded at like 9 cents, and then it came back down to 4 cents, and then this is pretty much where we got it in there. Let me zoom in a little bit. You had a little bit more time. It was hard to see, but I mean, I did do it in the first 4 minutes. But the idea was those super far out of the money weeklies, it makes sense. Since they're still far out the money, although the stock made a big move, they're not there. They're getting crushed off of the theta more. So these contracts, they went up. You could see here, compare those to the day before, they all went up. So if we start pretty much coming down, you'll start to notice when you start visually seeing as you go lower and lower down the chain, depending on how far out it was, they had a little weaker of opening. Instead of opening higher than where they were, it was like slightly higher and got lower and lower. And pretty much by the time we came to the 83s down to 86, look, I haven't moved my mouse. You could kind of see the chart get deflated and depressed. If you could take it, that's a good visual example right there. So that's why I was like, well, it's a lot cheaper. This stock was selling off in the morning, but it had a big move. So the idea was if it did reverse, which indeed it did, it had a few bad minutes. People, theta crush, all of that. Then it shot up. So it went up 400%. I was like, give me my initial investment, dipped out. That was the play we made today, but that is what I'm going to be looking for tomorrow. Or even if I don't decide to play any of these earnings, like Apple, this, all that, Friday continuation plays might be the move. So keep that in mind. But there is that. The final play, I grabbed this. I think it was a Twitter rumor, but it was also a bunch of call sweeps, and it did good. But MDB, we got in nice, and I bought it. Like I bought into the rumor a little bit just because it had a lot of volume and it actually held up. So usually off some of these rumor newses, it doesn't really hold up, but there's no earnings, no nothing. It had pretty historic volume and it held up, but there wasn't no rebuttal or anything. So it's going to be interesting. You guys know how these deals work. There's going to be a lot of volatility. If there is a buyout news and it's not higher than where you bought out, you'll get clapped. So I got 5 of these 290 calls at 55 cents. I was going to flip out of them. They went up a lot. They shot up to like 130, even like I think 160, but they came back down. I'm still holding them though. I like these types of plays and rumors. I did go a little bit big, $250, so we'll see how that plays out. But if it does shoot up or gets more steam or juice off that, I might want to get my initial investment back and hold the rest. But I like that play, and that's pretty much it. I'm going to be watching, using the options technique, looking at that strategy with pricing and what's being priced in. If the contracts have went down, to go play some of the FANG tomorrow. Going to be looking at the Qualcomm continuation in any of those earnings, and then just seeing what happens with earnings, because by the end of this week, we might have a very, very good idea if volatility is going to return or how it might look. So I'm very excited. I hope you guys are too, but that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to chill and relax, baby. We could all relate to the failures. We've all played earnings, so learn from this experience. Learn from each other. It's better to be late than wrong. Don't trip. Don't beat yourself up. Don't beat anybody else up over anything, but stay focused. Value, value, value. Appreciate what you got. Again, better to be late than wrong. You saw it with AMD, so God bless you. But the code loves you. I love you. I'm going to see you in the morning. Let's go.